gold trader Rajesh Exports reported revenues of 15 lakh crore rupees over 5 years, making it India's fourth largest company by revenue. That number is larger than the GDP of many countries. But there's just one problem. Capital markets regulator SEBI says most of that money never existed. In one of the most dramatic market fraud orders of recent years, SEBI has accused Rajesh Exports and its promoter Rajesh Mehta of systematically fabricating financial statements, hiding money in overseas subsidiaries, claiming ownership of African gold mines that do not exist, and running the company like a personal piggy bank. All while auditors signed off, independent directors worked for free, and investors poured in their savings. Today on the Morning Brief, ET's investigative reporter extraordinaire N. Sundaresha Subramanian, J. N. Gupta, Managing Director of Stakeholders Empowerment Services, and I ask 3 key questions. 1. How big is this fraud really? 2. How did one man allegedly fool the entire system for years? And 3. Who actually loses money here and how much? Let's find out. It's Tuesday, the 9th of June. I'm Anirban Chowdhury. This is the Morning Brief. To understand this case, you first need to understand the structure of this company, because this is not a simple fraud. It runs across 4 countries, multiple shell-like entities, and decades of opacity. Here's my colleague Sundar.
First of all, let us look at the structure of the whole company, the whole group, how it is organized. So there is Rajesh Exports, which is the listed company, which has large institutional investors like LIC having big stakes in it. And then below it, there is a subsidiary based in Singapore. And that subsidiary in turn controls a company called Global Gold Refiners, or GGR, in Switzerland. Below this lies the most important company, or the refiner, which they call Valcambi SA. So this is also a Switzerland-based company. So main activity of refining gold happens in this company. So the SEBI has found this revenue reported over the last 5 years. The total revenue amounts to around 15.44 lakh crore. Of this, there is only evidence of rupees 3,000 crore, which is reported by Valcambi, the Switzerland-based subsidiary. And SEBI says there is no basis for the remaining 15.15 lakh crore.
Now, here's where the story gets interesting. Every headline you've seen says this is a 15 lakh crore rupees scam. That number is both true and misleading. Here's J. N. Gupta explaining what actually happened with those revenues.
That the company, over a period of 4 or 5 years, over-reported revenue by 15 lakh crore. They neither booked the revenue nor the expenses. If you look at SEBI order, the reason is very simple. What they have done in the subsidiary, which is the Swiss subsidiary and US subsidiary, they have booked only the conversion charges. Whereas in Indian entity or in the consolidated statement, they have booked as if it was a sale purchase, which is a purely accounting issue, but absolutely wrong from the accounting standards. Because when you get gold or whatever you get for conversion, you never own it. So you can never show as an inventory in the balance sheet because you are holding it just for the person who has given it. So what they did in the Swiss subsidiary, where probably they were much more scrutinized, they were much more careful, they accounted it absolutely as per the accounting principle. They only book the conversion charges. So let it be very straight that the amount of fraud or amount of loss that public or banks or creditors will have is not 15 lakh crore. It is at the maximum what is shown in the consolidated balance sheet.
If it's not 15 lakh crore, what are we actually talking about? The answer isn't simple. Here's Gupta.
Now, if you look at the balance sheet, consolidated balance sheet as of 31st March, it is on the BSE and NSE website. The total balance sheet size is somewhere around 40,000 crore, against which the equity is about 17,000 crore and all the creditors, etc., are 23,000 crore. And assets are shown as investment and something like this. Now, assuming there are no assets, still the loss will be there to the extent of 24,000 crore of the people who are creditors of the company. But sitting here and not knowing everything, we cannot say whether to be 20,000 crore or 5,000 crore or 5 crore. Maximum loss as far as the creditors are concerned is 23,000 crore. Then come to the investors. As on date, the market cap of company is 3,000 crore, of which about 50% is owned by the promoters. So that means as on date exposure of investors in the market cap is 1,500 crore. So as on date investors are losing maximum 1,500 crore. But if you go back to the past where the share price used to be 1,000 rupees or something like this, in that case investor would have lost about 1,500 crore, 15,000 crore. Now the issue is this: can we say 15,000 crore is loss of investor, 1,500 crore loss of investor? It depends upon which investor bought at what rate. But notional loss from the peak price is 15,000 crore. Notional loss as on current date is 1,500 crore.
So we are not talking about 15 lakh crore in actual losses. We are talking about up to 23,000 crore to creditors and up to 15,000 crore in notional investor losses from the peak. These aren't small figures either. Now the second big question: how did one man, Rajesh Mehta, allegedly pull this off? Who was watching and where were the checks? Here's Sundar.
When the governance systems like the independent directors and auditors are not very strong, often the line between the promoter and the company kind of blurs, which normally should not happen in a listed company of this size. So when SEBI looked into the books and bank accounts, it found several instances of payments made to Rajesh Mehta, and corresponding entries of related party transactions were not reported. Though on questioning, the promoter and the company have explained these could be some payments which were due to some court orders. These could be payments of interest-free loans which were granted, and the explanations are coming now. But SEBI has found that there is no official record in the books of accounts of what these transactions are. So they are talking about a transfer of 77 crore towards obtaining demand draft favoring Registrar General of High Court of Karnataka. 10.75 crore subsequently utilized for payments to Ambika Sales Corporation, and routing of funds of 7.5 crore through Rajesh Mehta in connection with Affluence. Affluence, you remember this company where around 11,400 crore worth of turnover has happened. And all this has happened out of this 7.45 crore, which is the only money that has moved from the company. There has been a collapse of this fine line between the promoter and the company. So both have been functioning like a single unit. Transfer of fund from some of the related entities, SEBI puts them at 565 crore to a company called Elest. It is a company owned by Rajesh Mehta and one of his relative Prashant Mehta, and has a nominal capital of 1 lakh. And this is into this electric vehicles. There are some funds around 350 crore which has come back to REL from Elest's account. So there is a net difference of 215 crore which SEBI has noticed. And top officials like Suresh Gowda, Managing Director, Vijendra Rao, the Chief Financial Officer, they keep saying that they don't know any intricate details about these transactions except for whatever is already in the books. Top management is completely at dark. So it is only Rajesh Mehta who is kind of a one-man army running the whole thing.
And there's more: irregular purchase and sales agreements.
Even in sales also they had a large amount of transactions for which they did not find any records, and for other transactions they had only partial records, and even for transaction where there were records, documents which were received did not have proper details. This makes me compare to the Sahara group and its fight with SEBI. I remember truckloads of documents were sent to SEBI officers, and SEBI has to use these robots to just to organize and sort them so that they can refer and examine them later. Rajesh Mehta himself says that he has given 400 GB of data and around 80,000 documents. But the problem is these documents are not complete. They are missing in some cases, and even when they are there, they don't give the full and accurate picture. So this kind of very haphazard kind of documentation is noticed, which makes the entire numbers which are reported questionable.
And then Rajesh Exports also showed hundreds of crores sitting as investment in gold mines in Africa on its balance sheet. No mine, no title deed, no operational record was found. This, according to allegations, looks like money that left the company and was parked under a made-up asset heading. Now, Rajesh Mehta's contention is that SEBI is confused between revenue and EBITDA. Is that true? Here's Gupta.
Now, you have booked a revenue which you have not shown in your subsidiary. See, what happens when you consolidate the statement, you consolidate what is happening in the subsidiary. Now, in subsidiary, since you have booked only the conversion charges, you cannot book the total revenue into consolidated account. So, SEBI has not done any confusion. SEBI is not at all confused. SEBI is very clearly stating that if you have followed accounting practice in subsidiary, you cannot convert that conversion charges into sale purchase and show inflated in revenue in your consolidated account. Issue is very clearly that I have run the company the way I wanted to run without any accounting norm, without any paperwork, without any proper decision-making procedure, without any accountability. That SEBI is not at all confused between EBITDA and revenue.
In fact, it's Rajesh Exports which has allegedly not been cooperating with the forces investigating the matter. The forensic audit faced problems at almost every stage of the investigation. It was denied access to ERP systems and was not provided a complete journal dump, preventing independent verification of transactions recorded in the books according to the regulatory report. And the company declined to share subsidiary level records with the investigator, citing Swiss data protection laws, limiting auditors largely to reviewing financial statements prepared by the management itself rather than underlying evidence. That's what SEBI's report said. Here's Gupta.
Get the order. SEBI had started this investigation in 2024. And if you look at the sequence of events, you read the SEBI thing, SEBI has been asking them for document, given them personal hearing, all that thing, and they have been dodging it.
And the company's auditors had one job: to tell investors if the books were honest. They said everything was fine. ET reported that BSD & Co. signed off on Rajesh Exports' last 2 annual reports with a clean, unqualified opinion. Meaning, in their professional judgment, the financials showed a true and fair view. The director's report backed this up, noting that auditors had raised 0 red flags. SEBI, of course, disagrees sharply. It is now referring both CA P.V. Ramana Reddy of P.V. Ramana Reddy & Co. and CA P.L. Venkatadri of BSD & Co. to the National Financial Reporting Authority, the accounting regulator, for possible action. The question this raises is uncomfortable. Did the auditors miss one of India's biggest alleged financial frauds, or did they look the other way? Here's Gupta.
Auditors have miserably failed, because it is not possible that when I am auditing the company and I will say, okay, in Swiss subsidiary your turnover is 100, but for consolidation purpose it is 1 crore, 1 lakh crore, what I get in this. So that is the failure in every aspect they have failed. And we have pointed out that even auditor's appointment was not in accordance with the section 139 of the law. Next comes the independent directors. As we have already said right from beginning, we have examined, and from 2004 till now, no independent director has been paid a single penny. Now I wonder what is the reason that professionals or other independent people will be working pro bono in a company which is a profit-making commercial listed company. So that regulator should now focus and ask the questions to independent directors and to the auditors. Last year they had AGM, and AGM was not convened properly because the law requires 21 days notice. They gave only 12 or 15 days notice. The output of that is that if AGM is not held properly, all the resolutions passed are not passed legally or validly. So Manshia should have acted.
Gupta ends on an ominous note. Now, SEBI has passed only an interim order. The full investigation is ongoing, a new forensic auditor is being appointed, and big penalties could follow. The gold, the mines, the revenues, much of it may never have existed, but the investors who believed in it, they were very real. Meanwhile, the company has already lost 80% of its peak market cap, from 25,000 crore to 3,000 crore rupees. Whether Rajesh Mehta cooperates now, with so little left to protect, may be the last real test of this story. That's it for today. You were listening to this episode on The Morning Brief. It was produced by me, sound designed by Amrit Reggie. Keep following our podcasts on your favorite listening platform. Stay tuned.